Hello everyone and welcome to another weekly summary video for the SRS Pro. My name is Jordan and as you guys probably know by now, we're doing these Monday sessions where we basically go over the previous week's ideas generated by the softwares and show you what and how we would be looking to trade and basically the ideas that we find interesting for whatever the reasons might be. As you probably noticed in the past few, I don't know, by now it's probably 3 weeks, 4 weeks, a month or so, the market is extremely flat, pretty much no moves. For some pairs is, and for some masses, not just pairs, right? We're not trading only Forex. It's very clear and obvious what's happening, and the charts are indeed kind of flat and doing this. In some other assets, we see a bit of moves, but in general, the market is not very clear at the moment, which means in such moments, probably the best thing to do is step back. And if you're going to be trading at all, probably use less risk, right? This is always the suggestion that we have. So, previous week, we have 7th up until 11. That means these two we can be checking out. Now, starting with the pound yen, which I believe might be more interesting to be discussed. Let me just make this thing yellow. Now, first of all, if we're looking at all the indicators, we can see that this thing is pushing low, right? And right here, we got this breakout below. And from that point on, we can say, all right, as long as it's holding the high and all these indicators are holding, we should be looking for sales, just for instance, right? Of course, if you know how to perform multi-time frame analysis, if you understand methods like Elliott wave cycles, etc., I strongly encourage you to go ahead and use that, and then using the software just as a means of entry. Besides that, what do we have now? The first breakout, which I'm not sure if it will show up on your broker, but let's say it could be breakout right here or right here on this one, which is pretty clear, right? It would be failing right there. Assuming that you're protecting this half cross. Now, if you're protecting something above, this is a different story, but let's take this because usually this is how we're trading it. So I'm going with this kind of assumption. Usually the way I draw the trend line is I'm talking about entries here, right? Not a trend line in terms of support to resistance. If this is my initial attack and the high is broken, the most recent high or the highest high is broken, like we have it here, then that means I need to redraw the trend line. So now I'm taking this into consideration, the newly created low, and this high is now being covered, right? So this is how it works, which means if you're trading trend line breakouts, this is where you will be getting the next breakout, right? On this candle, you will be getting the signal. This one will be taken and the screenshot is taken slightly afterwards once we got the next signal, which is right here after the switch, right? From blue to red candles again. And that reminds me excuse me, to show something else. Now, in case you're not trading the trend line, here you can be trading a step setup, for instance, right? You have a tiny spike, probably, maybe not, I'm not sure, but it's pretty much this level. Then this thing is breaking, now significant breakout with at least a pip or so. Then you have the momentum starting to the downside. So it's kind of double confirmation. This is what I'm trying to suggest in this specific case. EuroCAD is another one. And right here, the first thing that we're going to notice is that the momentum and the sentiment are extremely, extremely bullish. 4-hour chart, 1-hour chart, everything is pushing up. There is only one red indication from all the indicators is this one red candle right there on the lowest current time frame, which is M15. Excuse me. Now, besides that, look what we have. push up, some sort of consolidation being formed. And this is where we have breakout of this consolidation pattern right here. After the breakout, the price is coming, retesting, playing around this zone, holding these levels. Right, this is a super good level. Holding these levels, and then it starts to push upwards. We don't really have break above the previous high yet after the retest, but what we do have is a newly formed, after the retest, the price started consolidating and started shrinking into something that reminds a triangular pattern. So now this pattern is being broken, which basically means we have the first one, breakout, retest, and during the retest in the consolidation zone, we can be actually attacking right here. Okay, this is what I wanted to say. Now, this specific setup, you could be trading in multiple ways. So, for example, if you don't want to be trading the actual trend line breakout here, you can be trading the high. Okay, you can be trading breakout, and since the signal, if there was a signal already, assuming it would be right here, right? The most recent one besides the one that we got here after this red candle. So this is red, 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 and then boom, that will be your signal. Now, this signal comes a bit earlier before the actual trend line breakout, which means once this thing was broken and it pushed up, now you see that the price is holding here for multiple candles, an hour or two. And then you got the push lower coming closer to this zone. I believe if you're breakout pullback retest kind of a person, that makes a lot of sense as well to start attacking somewhere around this zone here. Okay, this is also good. The problem with this kind of attack, by the way, will be that you don't really have a lot to work with here, which means you need to be protecting this zone or something like that, but I wouldn't recommend it. I mean, there is clearly a level here, some kind of inner level, but there are no swings, there are no lows. So if you go ahead and protect it like this, I think you will be taking a big chance. Okay. It will make some kind of sense because now you have the trend line. And technically speaking, you don't want for this thing to close below and start trading low, right? It could be used, but this kind of protection here, it would be much more aggressive in my opinion. The better opportunity will be coming if we go ahead and protect it where it is supposed to be a bit more conservative. Which means if you don't like the odds and the risk reward ratio in this specific case like that, okay, you could be just waiting for something more interesting to develop. For example, that's your breakout. This is the newly formed high. Now you have a new low to work with. Breakout to the upside, and then you go ahead and buy this breakout right here with this kind of protection, right? Now, I'm not sure if this will really improve the risk reward ratio, but it's just a suggestion. So it's good that we might talk about these things. All right, so I guess that would be all. If you have any specific questions about these two or any of the previous screenshots here in this table, feel free to drop a comment or find us in the Telegram groups, and we'll get back to you as soon as possible, guys. Have a wonderful week. I'll see you in the next videos. Bye for now.